But what are we missing? Let's go and check our inventory stock status. So we'll go to inventory and we'll look at inventory stock status by item. Now we only have component A1, iPad and iPhone, just one on hand. There is nothing that is drawing us to the 150. So let's exit that. Let's say we want to go to the same report, inventory. Okay, let's say maybe we'll see it in valuation summary. You also not see anything here. You only have one on hand. So with this, you already know that that step is wrong. Hi guys, you're welcome to my YouTube channel. Today we want to draw our attention to those who use general journal entries to record account payable and account receivable. It's a very wrong way to go, right? Because your reports are not going to be correct. So instead of using general journal entries to record a transaction that will bring in account payable or account receivable, rather you should make use of your bill and invoice. So I'm going to illustrate on using the general journal entry, then we thereafter look at the effect it has on our report. So let's go to company and let's make general journal entries. Now I'm going to be using today's date, 15th of May 2025. So let's say I decide to select account. So let's say we buy on credit, right? We buy on credit. So of course we are going to credit account payable and most likely debit inventory because we are receiving those goods. So if I click on inventory account and let's say it's 150,000, before we continue, I'm going to show you how it's going to reflect. Then you decided to use account payable because you have the knowledge of double entry system. Now you debit inventory with 150,000 and you credit account payable with 150,000. Are we seeing anything wrong here? There are a lot of things that are wrong here. Fine, I can decide to select a vendor here and say okay, ABC Limited. Fine. So now let's expatiate this. Number first error that is happening here is that we don't have we're not given the opportunity to select the items that we bought. Now inventory items in QuickBooks means that you want to keep track of the purchases, the sales, the stock that you have at hand. So now if you are not able to select a particular product here, this is very wrong, because if I'm going to go ahead and hit save and close, it will go, your inventory will increase by value 150,000 but not by item and quantity, but by value. Then your account payable is going to also increase by value 150,000, not also by item or quantity, right? That is number one mistake. So once we hit save and close, for instance, let's go to our report and we'll check on the 15th of 5 2025. Of course we did not select any item here, so we are not expecting to magically see products or items that we purchase. But for the sake of curiosity, let's go ahead, save and close. Then go to report, company and financial, then we'll hit on balance sheet. Then from balance sheet, you see as of 15th of May 2025. Then from balance sheet, you see we have account payable 150,000 and also have inventory 150,000. Let's go ahead and double click on that. It's looking fine here because our inventory, account payable 150,000, right? You hit on account payable also, it's also showing 150,000, 150,000. Fine. So but what are we missing? Let's go and check our inventory stock status. So we'll go to inventory and we'll look at inventory stock status by item. Now we only have component A1, iPad and iPhone, just one on hand. There is nothing that is drawing us to the 150. So let's exit that. Let's say we want to go to the same report, inventory. Okay, let's say maybe we'll see it in valuation summary. you also not see anything here. You only have one on hand. So with this, you already know that that step is wrong. Fine. If you go to account payable, it will also show you. Let's go to vendor and payables, vendor balance summary. So let's look for ABC. It will show you the account payable balance is on ABC Limited because we selected ABC Limited on the general journal entry. So I'm going to click on that to take me back to the general journal we created. So this is where we are. So automatically this process would be wrong. Similarly, if you decide to use this same process, that okay, let me adjust that. I want to take it to account receivable. If you take it to account receivable, just that your account receivable has to be debited. That is, you sell, right? So now if you sell and you are using, so let's see something now. So if you sell, of course your account receivable is going to increase by debit. Then from this other end, let's say you want to select cost of goods sold. Okay, we don't have anyone named cost of goods sold, so let me just quickly go to chart of account and edit. I think we have a lot. Okay, let's edit this. So I'm going to call this cost of goods sold. Hit save and close, then close this also, then we'll select it from here. So let's say let's revert that. Okay, we want to work on this same one. So account receivable, the first one we did was for payable when we buy on credit, but the second one we want to do now is we want to sell on credit. So if you select cost of goods sold account and say okay, this is the cost of the item you sold, 150. Now another thing, there is no option for you to select your inventory, and your cost of goods sold is not even supposed to come in now. It's not supposed to come in now. It's supposed to come in when you sell. If not sold, okay, you sold, right? And you have cost of goods sold, fine, it's coming in now. Okay, correct. So it's coming in cost of goods sold, and this is the value 150. Now if you hit save and close, okay, hold on, let's change this vendor to customer. So let's say it's Jackson. Now save and close. Yes, save. The transaction to account receivable must include the customer. Okay, so let's pick this up one. This should be Jackson. Oh, the other time it was account payable that was below. Okay, so save and close. Now let's go to balance sheet. Okay, see. So once you refresh, you see that there is account receivable. Double click on account receivable. You see here there is 150,000, but where is our inventory? We never have option to select inventory, so there's no inventory here. Now the other entry was the account receivable and the cost of goods sold. Now if you go to report, you go to company and financial profit and loss standard, you see we have cost of goods sold minus 150, which is also wrong, because cost of goods sold is like an expense account, so it's supposed to be debited. So what am I trying to do? We're trying to show us that you can't use general journal entry to record or to register that there is a credit purchase or credit sales. So that's the point we're trying to, that's the fact we're trying to establish here, right? So now let's go and show us the right way to do that. So if you want to buy on credit, you go to enter bill, you select, let's say ABC Limited, and you go to items. So let's say it is item or no, we are particularly about items. Yes, if it is expenses, if it is normal operating expenses, you can make use of your general journal entries. Yes, general journal entries. Now you have this drop down. Let's say you want to select iPad or iPhone 14. Then let's say you are requesting for 5 at that price. Then we'll save and close. Now let's go to this same report that we have been going to all this while. So go to report, company and financial balance sheet. So let's first of all see if we have the same information. So from here, we have raw material. You see, we actually connect that bill to raw material, so we can actually adjust it to finished goods. So let me double click, let me edit this, and select this place, and we'll select inventory. So I think this is better. So let's go back to the report and see how it's looking now. So it's not going to show us raw material again. It's supposed to show us what's it called? It's supposed to show us inventory. So see the inventory 5 million, which is correct. And if you go to account payable 5 million, which is also correct. But then let's look for our inventory. So go to report, inventory stock status by item. Now we should expect that our iPhone 14 has increased to 5 from the additional file. You see, there was 5 on hand, we sold 2, we sold 3, and we bought 5, right, on the 15th of May. So this is fantastic. Then we can also go to report, go to inventory valuation summary. You see, now we have 5 showing here, and we have 5 million. Similarly, I think this also can give us a report about the detailed transaction per these items. So when you go to iPhone 14, first of all, we sold 2, we sold 3. Then now, which leaves us at 0. Then now we bought additional 5. So we're now having 5. So this is correct. This is the correct way to go about that. So let's quickly go to customer, and then let's sell on credit. And we'll also look at. So if you want to sell on credit, you go to create invoice. So I'll go to create invoice now. Then I'll select a customer, let's say Abuki. Then the item code, let's also sell from the iPhone 14 so that we can see the movement. So let's say we want to sell 3. Now this is the price 1.5. So I'm going to go ahead and hit save and close. So we'll quickly go to inventory. You see, it has automatically reduced to 2 minus 5. Then if you decide to go to balance sheet, you see that the inventory has, we are having 2 million from 5 million. Now sold worth of 3 million, we are left with 2 million. But mind you, the account payable will still be the same. The only thing that is going to change is your net income. So let's go to our profit and loss. This is profit and loss. So we'll see that there's a revenue. This is a the date is not correct, so let's make sure we set this the accurate date. And before we even go there, you see that the other one did not show the sales income when we use general journal, right? Okay, so let's select the correct date. If I can see today, okay, let me just select 15 and refresh. So now you see we have a sales value of 45 and the cost of goods sold of for purchase for it 150 thereabout. So this is how you keep track. Now this 150 is coming in because of the other transaction we recorded, okay, using general journal. Then if you go to resale, yes, purchase for resale, see 15 of 5, there's 3,000, making the total of what is it called, 3 million. So they're making a total of 8 million. So this way, then you go to inventory stock status. Is this stock status? So you see we have 2 valuation summary, We also have 2 million. So please and please try as much as possible to avoid using general journal to register a purchase made on credit or sales made on credit in QuickBooks. If you are watching this video for the first time, please subscribe to my YouTube channel. You can like my video and also share the video. And don't forget to turn on notifications so that you get notified whenever I make interesting videos like this.